Okay, so I just started the recording. Sorry. So I'm explaining the new trade. So yeah, so once so I give a gap 10-15 minutes. Let members execute the trade because I don't want to send another email. They may get confused with other details. So after I send this, I prepare the chart of the symbol. So most of the time, like 90% of the chart, I'm preparing. 90% of the time, I'm preparing the chart to show you the technical analysis. I draw the line, support, resistance, trend lines, etc., and I show and I send the chart. After I send the chart, then I need to send you targets. So the targets, the target I provide is the stock target. So people ask me why you don't provide the option target. So option target, I don't know when the target will hit the stock and what would be the price. So it would be just an estimate if I give you the option target. So I don't provide option target. I provide the stock target because we are trading stock. So you're analyzing a stock. So I'm analyzing a stock. I know where the resistance support is, where the target should be, and I will show you through the chart. So I give you the target. Now, I don't give one target. I give three targets because someone have a $1 million account and some members have a $10,000 account. So $1 million account person may be buying 3,000 shares, bought 30 calls, sold 40 puts. So he did all kinds of mumbo jumbo, and he did it. So he's complicated, sophisticated. So I provide three targets, so he can scale out on those three targets. Whereas a person who has a $10,000 account and he's trading only one contract, he needs to get out only one time. So he has only one contract. So what I do, I provide you three targets. Sometimes I provide you the message with the buying more. So not all, we know that all the trades just doesn't go and hit the target. It's not magic. No, I don't have that magic crystal ball that I say, okay, just buy and tomorrow you see the target hit. It happens when the market is really good. So momentum is there, buying pressure is there, everything is getting bought. So it becomes like even a caveman can do the trading. So that kind of situation occurs sometimes that even a caveman can trade. Any stock, just throw the dart on the wall and pick the stock and sell. So that kind of situation market gives you, and people make money and then they lose money. So when the stock, let's say I bought the stock, the option February, March 245 calls at 10 and it pulled back. Now it's trading at 6. And so this is where the other traders make mistakes. They just send me the message, say, okay, the Facebook is trading at 6. Is it time to buy more? So just based on the option price, you cannot say that buy more. If you bought at 10 and then it's trading at 6, is it time to buy more? No, you have to look at the chart. You have to see if the stock is at support and it's most likely to bounce up if you bought the call. Then you look at the option and see, okay, what's the option price, and then you buy. So let's say you buy, it was trading at 6, so you bought at 6. It could be trading at, who knows, $2 or maybe $9. So if the stock option has pulled back only from 10 to 9, it's not a good idea to average down, because when you average down, when you bought one contract at 10 and then you bought another contract at 9, what did you achieve? You brought your average to $9.50. So, and then you increase your risk so much, double your risk. So it's not a good idea. So traders do that. They say, okay, I bought at 10, now it's trading at 9.50. Can I average more? Or at 9? No. You need to average when it's really pulled back and at support. So let's say I gave you the message buy more at 6. So now you bought at 10 and you have 6. So 10 plus 6. Let's say if you bought one contract at 10 and you're buying another contract at 6, ideally you should be buying maybe 2 at 6, not 1. So let's say you bought 1. So when you bought 1, 10 plus 6, 16, your average is 8. So logically you should be investing equal dollars, not equal contracts. So this is another mistake traders do. They just buy equal contracts, everything, whether it's Amazon, Google, or the stock trading at $4 and the option is at 50 cents. Buy 10 contracts. So that logic is wrong. Equal dollars. So allocate equal dollars. So let's say we bought another, I send you the message, buy more at 6. So if you have allocated a certain dollar amount for the trade and you have leftover money, so you can allocate another contract. So that's another message goes like that. Now I provide you the three. So after I send the buy alert and I send the chart, I provide you 3 targets. I used to call green, yellow, and red, and then in the guidebook I explain, but when the new members come, they get confused. Okay, what is green? What is yellow and red? So, and the logic behind the green, yellow, red was just like a traffic light. I am talking, and there's no song. Are you hearing me or not? Just from time to time, if you can leave a message that you can hear me. Maybe you need to dial in. So, okay. So people can hear. So 1 or 2 not hearing. So first target is called green target. Second is yellow. Third is red. So green, yellow, and red are first, second, and third. So the green target is like easy target. So easy, it will hit. So there is a very high probability the green target is hit because it's very close. So if the stock is trading at 100, the green could be 103, and it's right there. So with the momentum and the way the technicals are, it will hit. So there's a very high chance of hitting the green target, which is the first target of 103, let's say. Then there is a second target and there's a third target. So the second target, let's say, have a probability of hitting 85% of probability that it will hit. And the third target, which is far, it has a lower probability because, the further you go, the less chance you have for that target to hit. Another thing which traders can do, so I provide the stock target. There's something called conditional orders. I'm sure you know, but I discovered it in Interactive Broker. When I started, I was trading in Interactive Broker and I learned the conditional orders. I'll explain in detail in a separate session, but setting the conditional order. So conditional order is meaning you sell your option based on any condition. So there could be multiple conditions. So one condition is you sell your option based on the target of the stock. You sell your option based on some index hitting the major target. So something like that. Or the time passes. So whatever conditions your broker provides, you can do the conditional order. So when that condition hit, your order become a market order and it gets closed at the last traded price. So there is drawback also. You may not get the good fill on the conditional based on the conditional order if there's not enough liquidity. So if there's a liquidity, a lot of options are trading and the spread is narrow, conditional orders are great. So you can set up the conditional order. Now, so from time to time, I do revise the targets upward, mostly to the up for maximizing the gain, for further gain. Sometimes the target do get adjusted to the downside. So it's just a matter of what the stock is telling us. It doesn't want to go. It created a resistance. So when the stock created a resistance, we need to lower our target if we are in the call trades. So this fine tuning of the target is done on a daily basis on the trades. So target adjusted upward for calls. Most of the time I adjust the targets upward. So when I adjust the target, so let's say the way I do it, first, second, and third. So the first target price is replaced by the second target price. So if the second target was 106 and the first was 103, now the first has become 106. And if the second target was 106 and the third was 109, so 109 is updated on the second target. So now the second target is 109. So now the third target is revised upward. So I may put 111, 112 for the third target. So during the trading hours, my system, I set the alert, so I get the alert in my system. I am a system guy, so I develop many systems, work for SAP. So I was integration specialist. So I have integrated many components in trading, and a lot of resources, a lot of money have been poured into the system over the 10, 12 years. So I get the alert for the target. So I adjust, and update is sent to the members that the targets are revised. So if you have 10 contracts, you sold 2 in the first, 3, 4 on the second, and you're still holding. And now you got the alert, the target revised for the third. So you can manage your trade. So this is just about maximizing the gains. You'll move your target upward. Sometimes the targets are adjusted to downside. So you cannot be rigid. You have to be flexible in your trading. Members, so I give you example of the mistake members do. They set the profit target based on their desire. They say, okay, I want to make 50% in every trade. So that's or 20%. When I get 20%, I'm happy. So that's a wrong thinking. That when at 20%, so maybe you have a history in your trading system that 20% is your nice gain, and you almost hit 20% on all the trades in options. So if that is the case, and your data is backing up, maybe 20% profit is there. But if not, then try to maximize the gain. So we can't just say, okay, my profit objective is 50% or 100%. Sometimes the target needs to be adjusted. So I adjust the target to the downside. So I show in my email or SMS messages, I show via green arrow and red arrow. So if the targets are adjusted to the upside, I show via green arrow that this target has been adjusted to the upside. So it will show the green arrow. If it's adjusted downside, then it will show to the red arrow. And then there is a check mark. I show the target has been hit. The first target, second target, third target, or revised target is not hit. And in my system, I can see which target had been hit, on what date, and what was the option price at that time when the target is hitting. So another thing I'm doing, and I will send you, when the first target hit, let's say, and first target hit and the gains are 25%, I will know, and then I will send you the alert. Maybe the first target did not hit, but the gains are already there, 25%. Or the second target has not hit, but we have a 50% gain in the option. So that can happen. So I send you the alert that even though the second target not hit, but we have a 50% gain, so sell half of your position. So I'll show you what messages I send for the trade to exit. So there are multiple exits. So target adjusted to the downside also. Target gets adjusted downside. There could be many reasons. Sometimes the trade is stuck for a long time. The trade is stuck for a long time, 14 days gone by, and the trade is not moving. But technically, it has not given the exit signal. So we are holding it, and the time decay is reducing the option price. So when the time decay is killing the option, then and we need to exit maybe at break even. So if it's break even, so break even trade is a winner trade. So you adjust the target and get out. So I adjust the target at some resistance level. If it's a call, if it's a put, I adjust the target at the support level, and I send the message, okay, target has been revised to the downside, please exit. Now, so the buy price is sent, buy more if it's required, target is sent, any logic I show via chart, and then any update, if a newsworthy update, I send you technical analysis update through chart, any volume. So I monitor the volume, relative volume. I have a system to monitor relative volume. So relative volume is the volume at that given time compared to the previous average. So if you watch your last previous 30-day average or 10-day average, 14-day average, so what is the volume at that time? So relative volume also tells you something. Sometimes the volume climax is the exit signal. So the volume climax, you're already in the trade, and based on the technical, the volume was on average, and then suddenly the news comes and everything is flying and it becomes a meme stock. the volume climax and it's hitting the resistance. So that is the time to exit, not to buy, because you get caught at the top. So I send the alert, get ready to take profit update. So I send you the alert that we need to take a profit. It's reaching. So when the target is hitting, I get the alert that the target is about to hit. So let's say target is 105, and the stock is trading at 104.50. So I get an update on my system. It's okay. It's very close to the target. So I look at the trade and I send the message and to give you heads up. So now there are multiple exits. So the top traders, when they are trading multiple markets. They have multiple strategies for the same stocks. Sometimes they are selling puts, sometimes they are buying calls, sometimes they are buying stocks, sometimes creating spreads, bull spread, credit spread. They have all kinds of tricks up their sleeves. So they have multiple exits. So not only they can trade same, you can call dog, cat, lion, whatever. You can trade in multiple ways, and you can exit multiple ways. So multiple exits, multiple strategies, multiple markets, multiple contracts, multiple shares, scaling in, ability to scale in, ability to scale out. So all these techniques the traders who make money have in their arsenal. So multiple exits. I have it's in the process, and I'm developing a complex multiple exit system. So just for simplicity, I showed you on the slide what are the different sell messages. So let's say selling half, selling majority, selling rest, selling all. So selling half is, there's another one I'm introducing, selling 1/3. So selling 1/3 of your position when the green target is hitting. So let's say if you have 3 contracts, and logically you should hold for the maximum gain. So sell at the yellow target or red target. But sometimes you bought 10 contracts. So sell 1/3 means 3. So you sell 3 when the green target or the first target hits. So you do that. Selling majority, meaning the sell majority of your contracts. So when you sell majority of your contracts, so majority means like 70-80% of your contracts or your shares holding. So if you have 10, then you sell 7 or 8. So the reason I send out alert for sell majority, because it's hitting the major target, almost there, or hitting some resistance, or the option gains are 80% or 100% or 75%. So there are multiple criteria getting hit, or one of them. It could be 80% gain. It could be we bought today and tomorrow it's hitting something, major profit coming in, or days to expiry is less than 30 now. So if days to expiry is less than 30, the time we kicking in, we need to sell the majority, even if we are making only 20%, or we have been in the trade for 20 days and did not give any exit. Now suddenly it moved. So when it suddenly moved, this is the opportunity to sell. So there could be many reasons for selling your position, majority of your position. So when you sell majority of the position, the rest you're selling, let's say at the red target, the third target, or slide for the gain. So selling rest. So selling rest comes if you have done selling half or sell majority. Sometimes we sell all in one shot. So it's just what happened. There could be many reasons. The major target hit, some resistance level hit, some news came out. So you were in the trade and you got lucky, and there's a news, and everybody is buying it, but you are selling in that news. Sometimes I send you the sell price range. So the sell price range could be the option sell price range, or it could be the stock sell price range. So option could be, the option is trading at 945 and the stock is moving, and the bid is at 930. So I know that at least we can sell between 930 and 945. So the bottom is the 930. And because the stock is moving, so by the time the alert is delivered and the members are acting and the stock is moving, maybe the ask price is 10. So I send you the sell price range, sell between 9:30 and 10. So sell. Sometimes we send the alert to sell to close by market. So the stock is moving so much. I don't know when it will stop. So the gains are there. Maybe there's a news coming in, or something is happening, or maybe it's a Friday, maybe it's a long weekend coming. So send the alert to sell to close by market. So this is another type of message I send out to sell to close by market. Now there's another alert which goes out if this is based on the conditional order. You can set the conditional order close when major index hits a target. So if so it doesn't matter what your stock is doing, because it will stop doing what it's doing when the major index hits the target. So let's say you say, okay, S&P 15,000, so or 5,000. So S&P 5,000, if you have the trades and it belongs to S&P index. So if you think 5,000 is a major target, then get ready to sell your position which belongs to S&P, even if it doesn't belong, because one index hit the major target, and then the other indexes follow, especially if it's a leader index which is hitting the major target before the other indexes. So if S&P hitting some targets, major target, then and you're trading a NASDAQ stock, that NASDAQ stock will also start pulling back. So if you're aware of the major target, you need to close your open position at that major target is hitting. So let's say NASDAQ 10,000. So there was a time when the NASDAQ was trading below 10,000, NASDAQ 100, and we had position, and I sent the alert, sell all when NASDAQ hit 10,000, and so people saying, why you're sending all the alert to sell? So I said, sell all, because the NASDAQ is hitting, and we will get the pullback. So we need to understand. No, I don't sell any I don't have an indicator. I don't sell any indicator. So I don't have any indicator. So it's just a technical. I teach my knowledge. I sell my knowledge. So if you're interested, it's a 1-year coaching program. So I don't have any indicator. So what is the first target? So I'm explaining the first target. So first target is the immediate target. So it most likely it will hit. The expectation is high, 5% probability the stock will hit. And if you are overexposed in that position, you should sell some at the green target, which is the first target. So sell 1/4, 1/3 of your position. Second target is 5% probability. So let's say that we enter in the stock at 100 and it's trading at the second target. We know the resistance is 110. So most likely it will go to 110 and then it will drop some level, especially if you have options. For option, you have to be on a high alert when the targets are hitting, because option just today you see profit, tomorrow you don't see the profit. So 85% probability stock will hit the second target. So majority of your position should be closed at second target. And then there is a third target, which is I call the red target. So it's red means a stop, right? So it's like a resistance level. It will stop there, and it does. So and I will explain another phenomena which happens after market hours and before market. So a stock is expected to travel towards second target, which is yellow target, after hitting the first target. So if you have multiple contracts, you can hold some for second. Expectation is that you will receive an alert to sell half or majority of your position at the second target. So you expect that I will be sending you the alert, because I get the alert, I sell, you need to sell. And also watch the market condition. So there is something called detail overview, and there is something called a detail, and there is the overview. So detail overview and detail monitoring and overview monitoring. I have one course which I'm teaching on August 29. So you can send the message to the support team and they will enroll you. August 29 is a 6-session course. So watch market condition. So you need to be in tune with the market, not only just watch the position. You have to see the market also. So watch market conditions also when the second target is hitting. Maybe the market is really bullish, like right now these days the market is bullish. So if the market is bullish, then you have the opportunity to make more money on the via calls, and maybe you will sell less at the second target. You will hold for the third target. When the market is neutral or choppy, then you will sell the majority or all at the second target. So you have to adjust your trading. Now, the third target is called red target. It's a target after the yellow target. There is a 70% probability stock will hit. So we see the target there, and in between the third and second, there are some resistance levels. So the stock has to work its way, and sometimes it gets stuck, it's not there, it's not hitting. So you may want to, so you're on a high alert that I need to sell on the third target or just before, before the train reach the station, you just jump out because you can see your home right there. So you don't need to go, all the way to the station, just jump. So you just jump even before the third target hit. Because if you know your third target, it's not a rocket science. So if you are figuring out that this is the major resistance, other traders also know. They are very smart. They will sell before you sell. So just be aware. So sell rest or sell all. Third target can be revised upward for calls for more gain. So when I see more opportunity, that's where I revise the third target. So I move the third target to second target to first target, and then I give out the third target, and you see it on your message as a green arrow there. And you will, if you have all the alerts, email, you can see that previously this was the target, and now this is the target. And it can be revised downward also for puts. So puts, the stock is falling down, so we are revising the target. Importance of third target. So now when I'm determining the third target, is the target which is a major resistance level or a support level. So we know if it's a major resistance, and we are figuring out, so just below the major resistance, you're setting the target. So there has to be some offset, some percentage of the volatility of that stock. Below that major resistance, you set that target. So let's say the major target is 112, and the ATR of that stock is $4. So $4 ATR, you take 50% of the ATR, so it comes to $2. So you say, okay, $2 is the offset. So the major resistance is 112. I set the target at 110. So that is your target, 110. Because 112 is a major resistance. Something can occur, and then pullback can be severe. So you don't know if the resistance will be conquered later, and it will do. So all resistance are broken. But by the time the stock breaks the major resistance, your options are trading back to your buy price. So pullback can be severe. Pullback can occur towards first target. It can drop to your entry price also. So it can drop to your entry price. So and then you say, okay, I saw all the gains, and now I don't see the gain. So it's demoralizing. Now, the one thing which is very important is watching the stock if there is a news. So traders don't understand this. If there is a news and you already have a position open, and during the pre-market hours or after-market hour, if the stock is hitting that third target, the major resistance, so somebody is selling, if it's active in the pre-market, that should be, or aftermarket, that should be taken into consideration. That, oh my God, my target was 110, and news came out after hours, and it is trading at 110. You cannot sell your option. So if you have a stock, you can sell, but option, you need to wait when the market start trading in next day. So what happened? Traders don't know that the market has hit the target, that stock has already hit the target, and they just are excited. They say, okay, it's trading at 110. It traded 110. Now it will trade, and I will get out. And what happened when first of all, the market, because if it's volatile, there's a lot of activity. The option market is not open. The market maker is controlling it. He opens 15 minutes later when everything is settled and the books are in his favor. And then he opens the option market. And then you don't see 110. You see 105, 106. So, or maybe you see 110.50. and then you see 109, 108. So be aware of the third target during the pre-market hours and after hours if there is a news and it's trading actively. So the game is over in the pre-market. So be aware. There is another phenomena, and I will explain in the gap trading. So I trade gaps, gap above, and gap. Four kinds of gaps: gapping above, gapping below, or gap reversal. So gap up reversal, gap down reversal, gap up, and gap below. So when the market, so this is another important thing which you can take help in your trading. When the market gaps above, let's say you are in a position, a call position, and your resistance is 110. So when the resistance is 110, and in the morning the stock gaps above 110, it's trading at 112. So something happened. All the resistance got conquered. So you should know that the third target was 110. It is trading at 112. So it conquered the resistance. It's gapping above. So think of a resistance as a river. So think as a river. You are on this side of the river, and somebody is chasing you. And when you reach the river, the magic carpet appear, and then you sit on the magic carpet, and then you cross the other side of the river. So suddenly you're on the other side of the river, and you are safe. So it's very hard for you to come back. If you're fool, only then you will come back on this side of the river and tell your enemy to kill you, right? So same way, the market, when it gaps above the resistance level, it's hard for the market to come back below the resistance. The further it gaps above the resistance, the lower the chance of coming below the resistance. So at that time, if you want to take advantage of the gap and say, okay, it gapped up, I'm fine. Maybe it gapped up to another resistance level. So I was expecting this profit, and now I have this much. You would exit. Maybe you would hold and consider it as a brand new entry. So you had 10 contracts and you sold 7 before. Now you have 3, and news comes out, and the stock conquered the resistance level. So when it conquered the resistance level, it went other side of the river. So when it went other side of the river, so consider this as a brand new trade. So now you need to manage this trade for maximum gain. So how would you manage? You would say like this: 110 was the resistance, so now it's 110 is the support level. So you see, if at 110 was the resistance, now 110 is the support. So it should not break 110. So and then you can raise your stop. So if the market is really moving and the volume is there and it's now at 115, 116, so you can raise your stop, put some trailing stop. Although I don't put the trailing stops in option because I will get out. It doesn't work in option for me unless I'm trading Tesla and I have a big, too much gain. So same way, gapping below the third target for the puts. So if you have puts and the third target was the support level and it gapped down. So let's say 100 was the support and that was your target, and you entered at 110 when you executed your puts. So if it gapped down below 110, let's say it's trading at 108, 107. So that support of 110 is broken now. Now it has become a resistance because the resistance becomes support, support becomes resistance. So now you have some benchmark to exit and consider it as a brand new trade, as if you just entered in the trade and now you are in a profit and manage it. So gapping above, gapping below, the third target hitting, pre-market, aftermarket, all this needs to be taken into consideration. What the market is doing, your position is looking good, but the market is not cooperating. So be aware if your position is in profit and you're feeling very. So sometimes the traders they make mistake when they see a lot of green. They get up, they ignore that trade, they ignore the market condition. The market condition may not be suitable for you to hold that trade. Even though it's looking good. So be aware of all that. So this is the way I provide the trade messages, and there's more. I will show you now the market. So I have a market status. I'll just share my screen just a second, and then I will show you the charts. So I'm sharing my screen again. So let me know when you see the screen. Do you guys see your screen? Okay. So the market. So this is a report on the market, but behind this report, a lot of data goes into a lot of logic, and a lot of things occur behind the scene for me to get the status on the market. So I'll explain to you what this market report tells me every day after market hours. I can run this analysis during the day, but if I am concerned about that something major is changing and I need to know what my system is telling me. So the market, this report has 5 sections. So you see that this is the analysis date. So this report was generated based on the market close on 12th of August. So 12th of August, this market report was generated. So this is Monday. Today is Sunday. Yeah, so Friday. Okay, so it's current. So as of Friday close. Then we have 3 other sections: minor trend, intermediate trend, and major trend. Then there's a column called market strength, and then there's a column called market's volatility, and then there's some stats, and there are 2 barometers. So by just looking at this report at a glance, just look at this, and you should know the health of the market. So the last date on this screenshot shows the 20th of July. So 20th of July. There is a row 19th of July. So if you have this report, subscribe to the service, which is not that much. So 19th of July, we got the uptrend signal on the minor trend. So the way the market works, first is so there are various waves in the market. So there's a major wave I call major trend. There's another one called intermediate trend, and then there's a minor trend. So there's a wave inside the wave. So there's a major wave, then there's an intermediate wave, and there's a minor wave. So minor wave means, because it's term called minor, it goes up and down. And intermediate is the middle wave. So and then there's a major. So major signal in the market. So based on the analysis, so people do the analysis on just on S&P or just on NASDAQ or Russell or Dow Jones. I do the analysis on these 4 and combine it. So I combine all 4 markets, because all 4 markets needs to give a proper signal in harmony. So when the markets are not in harmony, that's the time to lose money. So all 4 markets needs to give you signal properly. The ducks should be in the row. So when the ducks are coming in a row, the first signal I get is on a minor trend. So on 19th of July, I got the signal of a minor trend change. So that was a signal that something is happening in the market. The market wants to move up. So that's the first, like a warning shot. And then, minor trend is not enough. Minor trend can rotate into downtrend. Right now, the minor trend started on 19th of July, and since then it's up and up and up and up. So there's no exit signal. Exit signal comes at intermediate trend. So there's no exit signal. This asterisk, so the red asterisk means there was some weakness. Although the market was in uptrend, but there was a weakness in the market. So on 26th of July, some weakness was detected. So I put a red asterisk to warn me that, okay, even though the market is in uptrend, minor trend, there is some weakness. So if you look at this, the major intermediate trend was in downtrend, and the major trend was also confirmed downtrend. So because the market was in downtrend, but the first signal came in a minor trend. So I'm looking for intermediate trend to give me the signal. So I go all in, almost all in via long position. So what happened on 27th of July? There was a warning on 26th of July because there was a weakness. So this is just a weakness. Then on 27th of July, I don't have to wait for the market because this analysis is done based on the end of day. Anything can happen during the last half hour, so end of day. So you don't need to wait. If you know the market is moving up and the stocks are moving up, you know what is coming up in your analysis. So during the day of 27th of July, we know that things will improve. So, and at the end of the day, things improve and the downtrend turn into an uptrend. So this is a major signal, almost a major signal on 27th of July for the market to go long and close your short position. It's not going to work. Short position not going to work. You need to close if you have and start accumulating on the long side. So this is the start of the market trend, the intermediate trend. Now, there's another one, like a super confirmed signal, which comes in a major trend. So I know there is uptrend there, and if the market continues upward, and you can see daily based on the individual stocks behavior. If you are in the market, you can tell what the market is doing. You know that the major trend is coming up. And another indicator, so this is, you can call indicator or the analysis. So I evaluate. So the market can be an uptrend or downtrend, but the strength of the market can be neutral or could be mildly strong or weak. So not only you need to analyze the minor trend, intermediate trend, or major trend, you have to analyze the strength of the market, because strength of the market will make you money faster. So this is the strength barometer. What I did, this is the green. So needle is at the extreme. So why? And then this extreme is shown as a very strong. So this is a very strong market right now. The middle is called strong, and then the light green is mildly strong, and the yellow is neutral. So when the market is in neutral strength, even though it's moving up, only selected stocks are being bought, not the majority of the stocks. So you have to be careful in selecting the stocks. So if you are in the market and you say, okay, minor trend is uptrend and the strength is neutral, so which sector is being bought or which industry group? Sometimes it's financial, so sometimes it's retail, sometimes it's oil stock. So different stocks in the basket. So you need to have a basket of stocks which tells you, okay, I know the minor trend is up, the market is looking good, but the strength is neutral, but there is a strength in this sector or this industry group. So I go for that industry group. And if let's say there are 10 stocks in that industry group, oil stocks, so out of 10, you select the one which is you feel comfortable. It passes your criteria. So from neutral, when the strength is neutral and the market is moving, you expect the needle to go to the green side. So you expect the indicator to move towards the green side. Then you become more comfortable. Then you increase your exposure. If you have, let's say, 10,000 and your exposure is 6,000, maybe you increase your exposure to 8,000. And then it goes, the strength goes to strong, and the market is confirmed major trend. So this is like a ultimate signal for the market to go long. So we got the signal on the 1st of August. First we got on 27th of July. And the confirmed signal came on August 1st, and the strength was strong. And then mildly strong. So once the strength of the market changes or fluctuates, it can be mildly strong, it can be strong, and then it goes to very strong, and then it comes down to, so that it's like a needle of your car. You know, sometimes you speed up and sometimes you slow down. Sometimes your car is dying, car is not moving, but the needle is moving. So this can happen. So the needle should not come in the neutral zone, on the yellow zone. So when the needle comes at the yellow zone, it means the strength has been lost and the trend is showing uptrend, but the needle can go on the pink side. So when the needle goes on the pink side is the time when the market is showing weaknesses and the trend will change. So if you subscribe to this report, so people say, why do I need the report? You do all the work, send me the signal to buy this and sell this. So why I pay for this extra service? So there's $1 million hidden in this report. So that's why you need to pay. if you are serious in trading, because you need to know yourself what the market is doing. Intermediate trend, major trend, minor trend, how many days the market is up, how far it is from the high, how far it is from the bottom, where is the resistance level, where is the support level. All this you need to know. So this is explained in this report. Very simple. The last one is the market's volatility. So I have a needle. So you can say needle. Right now the market volatility is normal. So when the market, there's another one, blue one, which means the market is quiet. So when the market is moving up in a nice fashion, the needle of the volatility should stay in the green or blue zone. So the needle of the strength should stay in the green, and the volatility should stay in the green or blue. So that is the time to make money via long positions. You have a great chance of piling up your profits when the needles and the trends all lined up. So right now everything is lined up: uptrend, confirm uptrend, very strong, normal. Now tomorrow the market can tank and crash. It's like line is coming, and then finally the line arrives. So by the time you miss out all that, because you were waiting for that line to come and the line did not show up. So instead of waiting for the line to show up, and you're scared to death that the top is coming, this market is a fake rally, all that, jaw dropping, things like that. You trade based on what the market is doing, not the what you think the market will do, or not what the gurus are telling you the market will do this. You trade based on what you see. So what you see is uptrend, very strong since July of 27. So all this is explained, is right on the chart. The last thing is volatility. When the volatility goes in a blue zone, so it means the market is really quiet. And when the market is quiet, when the market is bullish. Market is not quiet when the market is bearish. The bearish market is a volatile market. So when the market is going down or bearish, it is volatile. Sometimes it's extreme volatile. So extreme volatile is it goes 100 points and then it comes back 100 points. It goes 100 points and it comes back 100 points. So that kind of market. So that kind of market is good for traders, but they need to take their profit. Buy now, sell maybe an hour later. So bearish market is a volatile market. And sometimes they become extreme, like in COVID time or some bomb drop somewhere. So they go into a volatile mode. So knowing that the market is in a volatile condition and the market is bearish, you will have a different trading strategy compared to when the market is bullish, very strong strength, and the needle is at blue. So when the needle is at blue and the market is moving up, you need to you can hold your position if you have a stock. So option strategy is the same, because we are trading short-term options. You don't want to change your strategy based on because the market volatility is quiet, so I will hold it. Maybe you have a long-term dated option, then you hold it forever till the market gives you the signal to close. So if you have a stock, and the needle is blue, you just hold those stocks. Just keep holding it. Maybe on a pullback, you scale in. So this is very important for traders to know about the market, because 80% of the success is knowing where the market is doing and in showing up. So if you don't show up, if you don't know the market, you haven't done the work, you're just trading from your palm of your hand, open an app and just buy 2 contracts, 10 contracts, it's not going to work. So you have to do some work, and the work is done for you here. Now I'll show you the charts. I'm opening my another presentation. So today it's going on. It's okay, I can talk. I want to show you some charts. So just a second. Okay, when you see my screen, let me know, please. The website is tradegenie.com. So it's tradegenie.com website. Tradegenie.com. It's written here, tradegenie.com. So I'll show you some charts. So these are the trades we executed during last one and a half months or so. So I give you briefly, I give you the logic. There's more to it. So every trader has belief. So my belief about trading or the market is different than your belief. Yours would be different than mine. So we all have beliefs, and we trade our beliefs in the market. We trade our knowledge. So what happens is sometimes if I send the alert, the trader don't see it on their chart. They ignore it. They say, I can't see any what you're seeing. I'm going to ignore. Sometimes the traders say, yeah, I see what you're seeing, and I go where can I find the chart you mentioned earlier in the plan? They don't appear in the email announcing each trade. Most of the time I'm started doing it recently again, sending the charts. So after the trader is sent, I prepare the chart and send. It's a separate email, and it comes from a different server. So maybe it's going into your spam. So please, the charts are coming from a different server. For trade alert, I have a special server to deliver you emails instantly, like within 5 seconds. So maybe it's going into your spam. So please look. So I was talking about the belief. So we trade our belief. So my belief could be different than yours. And if my belief and your belief are in harmony, then when I'm sending the alert and it matches yours, then you are in a higher confidence level, and you can manage those trades properly. So I'll give you some examples of the trades. So I start with Apple. So these are in alphabetical order. So Apple is on the top. So here, Apple call trade, June 29, 2022. So I entered on June 29, 2022, when the chart looked like this. So the blue arrow is showing the entry point. So the chart looked like this. So it was at 139. So what happened? The decision to trade calls. So it's a simple, just in a very simple way. There's more, but there's a simple way of explaining. So the big gap, the big red bar came. So it Apple just pulled back and pulled back to the support level. So here is the why support, because it was a resistance level. So it was a resistance level right here, and it became a support. So positioned myself in the call, and then exited. So after so I didn't remember. So this one, so we entered in this, but then it pulled back. So it pulled back. You see this big red with the long wick. So it pulled back the next day further. So our calls were losing money, and it created a hammer or a bullish pin bar. So this is a bullish in nature, although you see the red bar, but this is bullish in nature. And then the Apple rocketed upward and sold it into this resistance level. So whatever is the reasoning at that time to close Apple trade at 146. So entered on July 2nd, closed at July 5. So like 5 days, we had 60% gain. Then another one, AFRM. So now look at the date. See the date of the trade. So July 12th. So July 12th. July 19, we got the first signal in the market. The market is turning to the upside. Remember the market status report? So it is before the market is giving the confirmation that the market wants to go higher, and the minor trend was downtrend. But then there's some experience and some of your judgment comes in to detect the change in the market sentiment before even it's happening. So look at the dates. Apple was traded on July 7. So the minor trend came on July 19. Intermediate came on July 27. So it's happening. These trades are in the before the market. So these stocks started telling, giving indication. Maybe the Nasdaq was giving indication that the market is bottoming. So maybe the Nasdaq was telling that the market is bottoming, and others in other markets lined up, and we got the first confirmation uptrend on July 19th. So next one is AFRM. So AFRM was right here. So AFRM, if you look at the chart, it's like dropping from 170, 180, and then here is the actual signal came right here on AFRM, then pull back. Here's a double bottom, and then it rose. So here I detected the move to the upside, the first white signal below the 50-day moving average. So when AFRM was 2020, I don't know what it is right now, we bought the July calls, and this is the way the market moved. So it hit this resistance. So the third target. So I explained to you the first and second and third. So first, second, and third were in between. The third target could be this, based on this resistance level of 30. And the calls jumped to 140%. So position here and jumped to 140 in when? How many days? 8 days. So exiting in a trade which is hitting, so there are multiple criteria triggering the exit. The first criteria, 8 days passed in the trade. We are holding it for 8 days. We have 139% gain. It's hitting some resistance. July 20 could be Friday. I don't know what day was it. Maybe it's Friday. Maybe some news is coming. Maybe some market is reaching some resistance level. So there could be multiple reasons for exiting AFRM at 30 level. The next one is AI. So AI was traded on June 3rd when the market was like downtrending, right? It was not up. I don't think it was up. So on June 3rd, but AI was moving up. So the signal came from this bar, the second bar. So you see this, the market gap down big time. So it's a white bar. Market gap down to support level based on this here. This is the support. This was the resistance. This became support. And then market rocketed upward. So gap down, reversal, and it moved up and closed at the high. So when the market, there's another logic. So when the market gap down and then it closed at the high, it's a short, long signal. So all the bears, if they shorted on the same day, they got clobbered, and all the big boys, they piled up on this day. So I should have gone in long at the close of this bar, but I waited. I think I did not see it, maybe. So logically, I enter at the close, near the close. When I see this kind of bar reversal, I enter at the close, because now my risk is defined. I know my stop right here. Maximum my stop is here, but I know, so stop doesn't matter. I know this is a confirmed long signal. And the second day, the market gave the signal, and it came back and conquered the high from where it dropped. So this was the recent high where it gapped down. Maybe there was some news, and it closed at the high. So this was the entry here, and the target. So based by looking at this chart and without showing you exit, I would put my exit somewhere here. First exit right here at 20, just 20 below 25. The second exit I will put here somewhere at 27.50. So it's like line drawn for you is 27.50, and the third exit will be somewhere here in this 30 zone, because this is a resistance area. So it's not a you can figure it out, and I teach in the 1-year program. So now I entered in the calls, and I close here at this level 2074. I closed for 87% gain. So it took 5 days to close at 86%. So this is not bad. AMD. So another thing you will notice, I have 500 stocks, but I'm not trading those 500 stocks. Only maybe 60, 70 of those stocks I'm trading. So you focus only on those 60, 70 stocks. You can compile the list of the symbols which you trade often, and then just focus on those symbols. So you will see these symbols, they appear again and again. So AMD closed today, maybe 3 days later, open again. So here is the entry. AMD calls on May 31st and close on June 2nd for 131. And the market is bearish. So, but the AMD is telling us it wants to go higher. Here's Baba call. So Chinese stock, they have their own thing, Baba, Baidu, and JD. So you can make a symbol list of your Chinese stocks. So Baba entry was at the gap up at 99, and then it rocketed up to 120. So gain of 166 on 3 days. So when you have a gain of 166 right there in 3 days, you need to take it, because tomorrow you will see 200% gain, additional 34%, but you may see 80% and then zero gain. So 166% in 3 days is better than 200 in option 5 days later. So entered here, Baba calls. Now another entry came in Baba after we exited. So this entry was wrong. Baba gapped down. So after our entry, the next day it gapped down. So it gapped down, but still hold, gap down at support. So when the market gapped down suddenly, you have to evaluate the gap levels. What happened? Now it gapped down, where it is. Your option may be trading 50-60% below your entry, and it gapped down. Below is a 50-day moving average, so there is a high probability it will hold the level, and it did. So it filled the gap, pulled back again, and then rocketed. So when it rocketed back to this previous high level, exit again, because it's hitting the resistance level again to the penny. So you need to exit. So my entry was wrong right here, but then recovered. So made and because of that, only made a 36% gain. BAC. So now Bank of America. So when you're looking at the financials, so you see Bank of America moving, JPM moving, and COF moving, Wells Fargo moving. So you are analyzing the financials. Maybe there is some news coming up, interest rate or whatever. So you see the charts of the financials moving. Then you say, okay, which one looking good? So if there are 5 horses in the race and all 5 are moving, then you have to decide, okay, which horse I need to select. And maximum I can select it's 2. 2 I can bet in the same industry. So maybe at that time look like BAC. So on a gap above, I entered on July 15 I entered in the call, and maybe JPM and WFC were looking also good, and then entered. So what happened here? So this trade got stuck. So entered somewhere here on this day, and then moved up, and then it went into a sideways move for like 2 weeks. So did nothing, just stuck. So when it poked its nose above, I just exited. So it took 20 days to exit in the trade. So this was stuck. So sometimes the trade is just stuck for a long time, 20 days gone by, and it's not moving. So when see the 45% gain. So another thing. So the exit criteria, 20 days passed. The trade luckily is finally giving the gain after a long time. Maybe there was a gain. So the gain came right here, but did not take it. Maybe BSE is moving, earning came and is moving. Maybe now JPM is looking better. Maybe WFC is looking better. So go for another financial stock if the financials are moving. So exit from BSE. BA, so I trade BA. BA break out from the resistance, entered right here, and exited at the same day. Exited same day. I think the exit came same day. So same day profit of 37% is better than 5 days later 60%. Maybe it will not come. So same day, if you enter and you have a 37% gain, you need to take, and the volume was also big. So if the volume is big, I don't know what happened to BA later. Maybe this is resistance level, but 37% is good if it's coming in the same day, and the volume is huge. So the volume was huge.Maybe there was a news, so it traded the news on the delivery or something. So there's always a news in BA. So just catch it and get out. BBBY. So BBY meme stock. So it started to move, and we entered in BBB calls when it broke the resistance. So this was the resistance level. The gap got filled. So I entered somewhere here in the middle, and then I saw the pullback. So on August 2nd, the market is already confirmed in the uptrend. So market is in uptrend now. Cash the BBY. So now the BBY, because it's a $6 stock at that time, you can buy 1,000 shares, 3,000 shares. I have a friend, John, who said, okay, I bought 3,000 shares. I bought some options. So I send the alert to buy options. If the options are looking good, you send the alert to the tiny stock service to buy BBY. And then this is what happened. It just gapped up big time. So when you enter here and it's gapping and pulling back and giving a red bar, you need to exit. So 304% gain. BDX. So BDX is a very choppy chart, but I entered BDX at 242 on July 22, and I had to wait and for the exit. So BDX entered here, it just did nothing. Pull back to the entry price, go up, pull back, and then the moved up. So this move was an exit into the resistance. So this is the resistance level here. This range is resistance level. This level is a resistance level. So on this big up move, you exit, make 79. Another one, Baidu put. So this is the put trade. So Baidu moved up from the double support. So here's the support, Baidu is moving up and created this bearish bar. This is a bearish bar, and it gapped down. So now this is the logic. This is a double bottom market. Baidu is moving up, moved up and created a pin bar, or you can say a doji or spinning top into the resistance, and then it gapped down and created a red bar. So what are the chances? What are the chances of Baidu to just start rocketing upward after you buy the puts and go higher and not come down for another 2-3 days to maybe 140, 135 level? What are the odds? So buy the puts, and the market is bearish. So market is also bearish, and you have to do some puts trade also. So exited on the second day on the red bar. Exited on second day because second day entered on June 9, exit on June 10, and it's 85% gain. So this second day 85% gain is better than 150 gains 1 week later, because you don't know what will happen in option. Here's a trade for CF. So this is a very you can say simple trade. Not much logic. CF was trapped in the consolidation zone, and suddenly it started to move. So this is a bullish bar. Nobody, when you look at it, you can say I'm pretty confident the CF is moving. Here's the support level. So I rather go long than just wait and just wait. Maybe there are other stocks in the same category. They are also moving. So not only CF, but other stocks are also moving. And you went long on a via pause, and then this is what happens. Moved into the resistance. So this is the third target into the resistance, and you exit at 108% gain. Here is C. So another stock in the financial. So BSC, then C. So C gapped up. So when C gapped up, what are the chances? So when the stock, after tanking from 68, double top and tanking and goes to 44, and then suddenly gap up and the volume is huge, what are the chances of this and filling the gap? What are the chances of C going up and coming down after you see this phenomenon? Do you need any indicator to tell you to go long on C? So go long on C on July 15. 10 days later, when it started to dwindle at the resistance level, 166% gain. So maybe other financials were also moving. CLX, same phenomena. CLX, right here. So this bar, the 1 day before, the signal came 1 day before, but I caught the second day. Sometimes you cannot catch all the stocks. All they are moving, 500 of them. You can move much. So maybe you put it on the watch list. So at the end of the day, you see this, you put it on the watch list. You say, okay, I'm going to watch it tomorrow at 50% gain, 50 cents gain. So when this stock moves above the high of today, 50 cents, I will my alert will come and I will take a look. So alert came and I decide, okay, I need to buy. What are the chances of CLX after it's making this move with a big volume to come down below this support, then to go up? So this is what happened. Exited right there at this resistance level. So this is the third target. So enter at 125, 126, evaluated the target at 147, something like that here, and exit. So 239% gain. Coin. So now coin. So you can trade coins. Maybe you watch Bitcoin. Like right now, let's say you're watching Bitcoin and say, okay, Bitcoin is moving, all the other major cryptos are moving. So then we see what the coin does. So you put the coin and other blockchain stocks in your basket and see what they are doing. So coin, enter at 60 on July 8th, enter at exit at 74 for 136% gain. Just watching the Bitcoin move and watching the coin and the other stocks related to crypto or blockchain. Here's the CBS, another logic pullback at 95, went long on CBS, and then this is what happened. So entry was wrong here. Entered here, then it gapped down, but gap down and reverse. So this is a gap down reversal. So when the gap down reversal occurs, this is a first clue that the market wants to move higher. It wants to reverse higher. And so the one thing, the market gap down and moved up higher and closed at the high. That's one signal that, okay, my entry was wrong here, but this is telling me the market that I will be all right. Maybe I want to add more to the position on the gap down reversal. And then, so when the stock gapped down here, so it gapped down big. So it closed here and it gapped down here. So there was a big gap down, but then gap up next day. So when the stock gap down and then gap up, that's your signal to go long. If the stock gap up and then gap down, it's signal to go short. Because why did it gap up yesterday and today it's gapping down? That's a signal to go short. Or if it gap down and gap up, that's a signal to market's telling you that it wants to go higher. So whatever was the bad news was not bad enough. The big boys bought into it because they are the ones who moved the market, not me and you. So they moved the market up and closed at the high, and then other big boys joined. And then it went up, so it was not making money. And then it gapped down and filled the gap. So CVS went on a roller coaster ride, gap down, move up, then gap down, and then close higher. And then it gapped up, closed, filled the gap. And then when this gap came, so when multiple gaps are occurring, so this is another thing. When multiple gaps are occurring, maybe you want to close on the third gap or fourth gap. So back to back in the last 2 weeks, there are so many gaps occurring. So this gap occurred, a huge volume, and you have been holding here and you saw all this upside down moves, you need to exit. And then when you look on the left side of the chart, so when you look on the left side, take help on the left side. So you saw this move and you say, okay, I need to exit. So we entered on July 12th. So we got stuck in this trade July 12th. So from July 12th to July 31st, 18 calendar days, and then another third. So 18 plus 3, 21. So it took 21 days for the gain to come at 56%. So this could be another criteria for your exit. Trade is days in the trade, 21. Gain 56%. Drawdown this much. Today is a big gap day, big volume. There is a news. I better exit in the trade. So and it's hitting the gap is occurring at the resistance. So gap is occurring at the resistance. There's a big volume. I'm stuck for 21 days. Now I see 56% gain. Before I was seeing 56% loss. So so all things telling you that you need to exit instead of being greedy and looking for more gain. And maybe you have other opportunities in the market. Maybe the market is red and your trade is moving up. So maybe there are other things. Maybe tomorrow there's a news coming. Maybe today is Friday. So many criteria. So this is the DraftKings. We entered DraftKings at $14. So a lot of trades I send as a complimentary and the charts I explain via my broadcast. So and then the paid members they get more. So this on August 1st, DraftKings was moving and we went and entered long and bought the shares at 14. And then next day we got out. So what was it? So this is the big resistance level. I think DraftKings is trading higher, but 30% gain next day into the resistance, exited. DVN. So DVN is an oil stock we trade, or EOG, DVN, CVX, PSX, SLB, all these XOM, Chevron and Exxon, and where I pay, you pay for the gas. When you Valero, so you pay for the gas and you make money from these stocks. So 55 at entry at 55 on July 12. Maybe there were some other oil stocks, they were also moving, but I selected DVN and exited next day, or not next day, two days later at 35%. So it's because of this tiny bar. So I don't know this. It's showing less, like not much left. Maybe it moved, but I'm happy with this. On a tiny day, I entered here, and on a tiny candle day, I exited. And then I have EOG, so I trade EOG. So this EOG is a clear-cut buy signal on this day. It gapped down and then it reversed, and not only it took out the previous red bar, but it almost took out the day before red bar. So gap down and reversal. This is a great signal to go long. There is no question to ask that it gapped down here. It filled the gap. Now it's reversing. Should I go long? What do I do? Should I wait for my indicators to line up? Where is stochastic, RSI? No such thing. Just go long, because why? It gapped down and reversing. So it's common sense. Your stop is somewhere here below this. If you go long here and it goes down below, okay, you need to exit. And you look on the left side, this is the support, here's the support. So this could be 92, 93 is a major support. So you position yourself, and then you exit on a gap up with a tiny candle and going to the major moving average, which is the 50-day moving average. So it gapped above and right at 50-day moving average. So 50-day moving average from above acts as a resistance. 50-day moving average from below acts as a support. So it gapped above and hit the major support resistance, and a 24% gain is good enough for. Sometimes it's 24%, sometimes it's 100%. Afra Foot Locker. So this was the resistance. You see the consolidation, the resistance, and then it started to break out from the resistance. So what are the chances of Afra to go down than to go up? So bought the call and sold into the resistance at 35% gain at this resistance level. The next one is Goldman Sachs. So this is another favorite one. Goldman Sachs. So Goldman Sachs, JPM, and WFC, BAC, I don't trade much. So the Goldman Sachs I trade. So the market gapped up and pulled back. The red, this black bar. So market pulled back, and then it started. So there was a big volume. So next day, I think I entered on this black bar. So on this gap up. So I entered here on the gap and a huge volume. So what are the chances of Goldman Sachs with the huge volume gap up, and it's at the double support, multiple support here, and it could be the beginning of the market. And look at the date, July 19. So on July 19, we got the first minor trend uptrend. so minor trend, when minor trend is giving you uptrend or major trend or intermediate trend, there are other stocks moving. So at that time, if you go back and evaluate all the big stocks, the major stocks, they must be moving. That's why we have July 19 going along on a Goldman Sachs. And then on July 22, when it hit the resistance level here, based on this, exited at 59% gain. So 3 days later, exit. So enter here on the gap down, double, triple support here, big volume, and then wait for the exit signal into the resistance and exit. I could have exited here on the white bar because it's hitting the resistance, but I exited on the red bar. So exit. Mara. So Mara blockchain. So Mara, Riot, Coin. So you watch. So Mara, when it gapped up with the big volume, went long 976 on July 18. So 1 day before the minor trend is giving us the confirm uptrend, not the confirm but the uptrend. So its market is building up, moving up before even the minor trend is. Market just doesn't move suddenly; it just move up. Very rare, but it starts to show because the supports are being held. The stock doesn't want to go down anymore. Some news are coming up, and then you are looking at your intermediate trend and a minor trend to give you some confirmation. So July 19 came, but I went long on Amara with a big volume at 976 and made 150% gain in 3 days. So again, entered and exited on a red, not on the red bar, but on this, on a gap down, and then the market came back to the resistance level. So exited right here because it went up, that created the red bar, then gap down, and then moved up. So when it moved up to the previous high, I exited. The gain is 150%, so not bad. McDonald's, so same phenomena. So you see the pattern. McDonald's went down on the earning. So earning came, and I think this was earning play. So earning came and it went down. So the moment it went down, it started to reverse. So when the bad news comes, market pulls back or move down, and then it doesn't want to go up. It starts to move up. That's telling you need to position yourself towards the long side. So McDonald's pulled back to 250, gap down from here on the earning, and then it started to move up. Look at the volume. So it's moving up. What are the chances of McDonald's to go down or go up? And there's you see the line on the McDonald's is like line, cars after cars in the drive-thru. So I don't know about, but I see this, and I go long, and I entered into this. I exited on this resistance in 3 days, 74% gain. Here is MGM. So when you're watching MGM, you're watching Wynn Resort, you are watching LVS. So LVS, MGM, Wynn, these three. So MGM broke from the resistance. So MGM broke above. So what are the chances of MGM? And the news is coming, maybe news from Macau or something. So what are the chances of MGM to go down and to go up? So position yourself and exited right here at 42% gain. So these are the cavemen trading. PDD puts. So this is a put trade. So now look at this put trade on July 11th. PDD moved up and created a consolidation zone, right? A big on the top. Here's the resistance, here's the resistance. So when the market has moved up for a while and it creates a consolidation. So now the market will do two things from the consolidation. Either it will go above the consolidation and it creates another leg, so another leg up. So that's powerful from the consolidation breakout, or the market gaps down. So I mean, it can pull back, but the ultimate signal is the gap up from the consolidation or the gap down. So it gapped down. So this is a clear-cut signal to go short. What are the chances of PDD after gapping down from this consolidation and created a big resistance level, which was here at 70? If you see 70, 75 resistance level, it just got stuck. So all those who were stuck here, they sold, they were selling here. So distribution is going on. If you count the bar, the white bars and the red bars, and it's at the previous resistance, you are watching it, then you know that, okay, I just want to wait for the gap down and or some kind of signal. So gap down, bought the puts. So bought the puts, and then it did the same thing. So you see, here is the consolidation zone, and then it created another consolidation zone. So it just but it did not move into this zone and try to break up. It just lingered, and then finally break. So when it broke, because it moved up after hitting the support, when it came back down, I exited for 48% gain, and it was August put. So the time was also not in our favor. For August put, after how many days? After 28 days. So it took like 28 days for the PDD to break down. So entered here, it took 28 days. Entry was on July 11th. So 20 and 10. So 30 days. So this took 30 days in the trade. So the trade lingered for 30 days, but exited at 48% gain. Peloton. So now the Peloton is just going crazy to the downside, and it started to show, this is the bottom, and it started to show that it wants to move higher. They in the news. So when you look at the news, it's like manufacturing is outsourced or cutting the jobs. So some cost recovery is happening. Somebody is taking some measure, and the market is liking it. So market is liking it, you go long because the support is there. There's a news, cost cutting going on, outsourcing and changing the strategy. The market is liking it, so you go long. And then I saw the pullback here. So it went up, but then it pulled back to the support zone. So did not violate. And then when it moved up to this resistance, 46% gain was good enough. So this trade took 6 days to close. Rblx as another logic. Here the market, after consolidating, tried to show that it wants to move higher. So what are the chances of RBLX? If it falls, let's say RBLX falls, it will fall somewhere in this zone because there is a rising 50-day moving average. You see the rising 50-day moving average. So this is a support zone. So chances are it will hold this, and I will manage by buying more. So bought calls, and this is what happened when it hit the resistance level. This is third target at 49. So any target which is like close to 50 is a major target. So 50, 100, etc. So, and it's showing right here. So close at 96% gain. RIVN. So this is another trade stock. So when I'm trading RIVN, I'm looking at what the Tesla is doing, what the NIO is doing, or what other automotive stocks or electrical vehicle stocks are doing. So you need to evaluate others. Maybe there is some news in other stocks, and the others are following it. Maybe Tesla is moving, maybe NIO, maybe there is a news going on, maybe there's new delivery. Something is happening, and it started to move. So what are the chances when there's a 50-day moving average? What are the chances of RIVN for me to make me lose money than to make money? So it made money. I closed at this resistance at 42% gain. ROST. So when I'm looking at ROST, you need to look at the retail factors. So retail factors. So you look at all the retail stocks. Okay, the Target, the Macy's, the ROST, the Nordstrom, JWN. These are stocks are moving, or something is going on in the retail sector. So today is a retail sector day. Let's say yesterday was a finance day. Tomorrow is a blockchain day, and the day after tomorrow is the oil day. So something is going on. So today is a retail sector day, even though market is bearish. So retail stocks showing, and this was a clear-cut signal here, double bottom, and another white bar. So what are the chances of ROST to move down or to go up near 80 level right here? So I exited. So I went long on this first white bar, and I exited right here. Gain is 95%. Maybe I have another trade lined up, such as Target or Walmart. I don't know, but maybe there is something going on. So I closed ROST. Maybe I opened Target, or maybe some other Macy's. So another one. Okay, so I entered again. So I entered ROST again. So I exited here, and then I exited on a pullback at 79. I entered again at 79. So I entered here. Maybe I entered at $80 and I saw the pullback. Maybe it was gapping up and I entered here and I saw the pullback on the same day. So sometimes you see the same. As long as the pullback, sometimes the trade you enter and immediately you start seeing, oh my God, what is happening? I caught the knife. So if that is happening, then you close it. But if you see the minor pullback, okay, calm down. So maybe I entered at 80 and then I see 79. Okay, right off the bat, I'm losing money. So I calm down. I say, okay, no problem. And then the no problem, it took some time because it pulled back and support, it held. It moved up and then it gapped down. And finally, it rocketed. When it rocketed, it took time. So July 18th to July 8th. So 12, and so July, yeah. So 20 days, 20-something days, and I exited at 67% gain. And I thank God that I exited. Same way spot. So spot calls. So remember, May 31st is a bearish, our market is bearish. And I'm sure you all the call police. So market bearish, 112, entered here and exited at 54% gain. So when the market is bearish and you're trading calls, your percentage, your target is lower because the market is not in your favor. So your percentage is lower. When the market is cooperating and you're also trading, the percentage gains are higher and your targets are wider. So, all the tide lifts the boat. So spot 54% gain. Target. So maybe the other retail stocks were moving. So when you look at the target chart, what are the chances of target to go down than to go up after a big gap down? So here is a 250 level and then a big gap down and all kinds of news coming, the retail stocks are, nobody's buying, inflation and all that. So what are the chances of a target to move up? And there's a big gap. God knows it can go all the way here. I'm happy at somewhere here. So I position myself long and close at 76% gain. So this is enough, right at the resistance level, because this is where the journey will begin. So, and we don't know if the journey will begin because this is the beginning of it's a vast land. This is a river. This is like a big space out there from here at 160 level to 207 level. This is a big land, and this is another gap here. So maybe you can buy long-term calls, and the target, I don't know where the target is, but on August 4, exited right at the beginning of the journey. I don't know if the journey will begin or not. If it begins, I can position myself again towards this journey. If not, I'm happy. I'm right at the border. It's like I'm at the border now. I'm evaluating, should I cross the border or not, or just I go back home. So this is the exit. TXN, so Texas Instruments. So maybe the technology stocks are moving. So volume is up, broke the resistance. I position myself. What are the chances of TXN to go down than to go up when it broke this resistance level and the volume is high? So 76% gain on this gap up. So pull back and the gap up, I close the trade. UPST, so this is another one, Upstart. So Upstart, what are the chances of Upstart to go down than to go up? And especially the market has given you the confirmed up signal. So you look at the market trend report and you say, okay, I have a confirmed major trend up on August 1st. July 27 was the intermediate trend and July 19 was the minor trend, and the markets are moving and all these beaten down stocks are moving. What are the chances when the stock gap up from the bottom to go further down than to go up? If it goes down, you close the trade. This is a game. So you're playing, the stock market is just a game. So you're playing the game and you say, okay, I would close my position if it breaks. Otherwise, I hold. And it went to the resistance, close at 58% gain. So this is the logic. WHR, another retail stock. So maybe they have maybe WHR is related to home builder. Maybe the appliances are getting bought. Maybe there is an increase in home sales or economy is improving, or whatever is going on. But the WHR is telling us clearly it wants to go higher after making the bottom here. What are the chances of WHR to go down and to go up? It should go up to this level. If not, it breaks this, okay, I'm out. But it's telling me big volume, big white bar, breaking the resistance. Come somewhere, it will come to this 50-day moving average, I will sell. So I sold early. I did not wait for the 50-day 70% gain. Win. So another one, MGM, LVS, Win. So these three are the casino stocks. So it's moving up after making a bottom here. It gapped down and consolidated, and now there is a white bar. So what are the chances? So what happened here? So Win gave us a trouble. So entered here and then gapped down. But look at, so if you're in the trade and you say, okay, hold. Should I hold or should I exit or fold? So you hold. It gapped down and then created another bar with the long wick at the bottom. And here's another bar. So into this bar. So this is a bar where the support is, and it's confirmed that this is a support with this white bar. And when it gapped down, it made a higher low, and then it started to move. So then we exited here at 50% gain. It took from July 7 to August 3rd. So 26 days. It took 26 days, but came out alive at 54% gain. So this gap down, and then next day up move told us technically. So technically, the stock is telling you to hold the position, but the option is like clobbered. Maybe you lost 60% or 70%. So this is where the game is. People put the stop on the option, and for option, ideally there shouldn't be any stop. You're using the option and trading stock. So you use trading option, but actually you're trading stock. So if the stock has not given you the exit signal, you shouldn't be exiting from the option. So people say, I put 20% stop at the option. If I'm out, I'm out. So 20% is stop. 10% is right there with the spread and little pullback in the option. You see the 10% right away. And if the stock moves $1, $2, then you see another 30, 40%. And if you're trading a lower price stock option, so if you bought at 80 cents, you will see 5 cents tomorrow. And then you will see $3 2 days later. So have to know all that. So if the stock has not given you a technical exit, you need to manage your trade and buy a little more. So I have traders who make too much money because they manage their trade. They buy, they do all sorts of things. They're trained, and some of them are my students, and they manage their trade and make a lot of money. So 54% gain and a few more charts. So I'm at the X. So Exxon, I don't trade a chart like this. When the market is moving up like this and the stock is at 99. So I don't do that. My trade is on a severe pullback and then it's a new trend. So this is an exception trade I did. So especially at 99 level. Maybe there were other oil stocks moving up. So I decided, okay, there will be a breakout and I take the risk. So the breakout came and I exited at 105% gain. And you see the volume was huge. So volume huge and a breakout. So I just exited at 105% gain. So these are the recent trades from June to July and some August. So these are some of the trades are from swing. Most of the trades are from swing option service, which is on the website. And some are from the swing light service if you have a smaller portfolio. And some are from the lead. So if you want all these trades, let's say you say, I want all this, then you join swing option service. So to briefly, to summarize, I have a 500 basket of 500 stocks, but I trade like 100 stocks out of those 500. But I just keep it there because I need to know what the other stocks are doing, even though I'm not trading. But you should know overall 500 stocks, especially S&P stocks. So some are S&P stocks, some are Russell, some are NASDAQ. So from NASDAQ, I have 70, 80 stocks. S&P, I have 100. I think S&P, I have all. and then some from Russell, and some Dow Jones 30 stocks. So all that basket I watch every day. I've been watching it for 15 years. So 8 to 10 trades are executed per week. So at least you get one trade, maybe sometimes two, sometimes three. It depends on how many trades are being closed and what the market is doing. So objective is 40 to 100% per trade. So first target is 40, then 60, 70 in the middle, and then 100. I provide exact buy price, so you don't have to chase. What price I gave you is that price in between bid and ask, and you can set the limit order, and you will get fill. If not, then it's okay. You don't get filled. Tomorrow is another day. I provide 3 targets. I give you constant updates on the target hitting. When the target is hitting and the options are hitting a major gain, so if the second target did not hit, but the gains are 75%, I will send you the alert to sell some or half, because 75% gain. Trade is expected to last from. So this is my desire, that the trade should last anywhere from 1 to 7 days. But as you see, some trade have lasted for 28 days. So hang on to some trades. Trade alerts are sent via email and SMS. If you give us the phone number, we give you SMS. Constant updates, provide you the target revision and some news of the charts. Webinar like this. I have created 2 guidebooks. One is a 71 page and another one is 21 page, where I describe all this, what I do. So you can read that. I used to hold webinars teaching like this on a regular basis. I stopped doing because a lot of things happened, COVID and this and that, too many things in my life. Now I'm back, so I will constantly give you teaching. I plan to give either Sunday or Monday. For this swing option, you need to have at least 15,000 suggested or more. So some members have millions, some have 15,000. So all traders, different portfolio. And this is an active trading. So active means if you are busy, you can still trade from your mobile phone app on the phone, because I'm providing you SMS. And if you have email alerts set up, you get the email. You don't even need SMS, because the emails are popping up right at the same time as the SMS. So I conclude my today's session. So you don't need degree. I have degrees. So it helps me. I have MBA in finance, I have IT degree, I have SAP consulting certification. I've done too many. I was a bookworm, and I read. But you don't need to be. You need to be street smart. So just street smart, and you are good to go. Don't need degrees to trade successfully. I do the job. You can take a trial. If you don't have, you can take a trial for $97 for the first month, and then it will renew at the regular price. So any questions, send email to support at tradegenie.com. And now let me read some email, some questions. So yeah, Larry, I know I will restart. Yes, we accept payment from credit card or PayPal. Zelle, you can send money to Zelle, but then if you send the money via Zelle, it's just one time, and then when the time comes for renewal and you miss the payment and we don't realize it, my system can block. Although we give you 5 days, 10 days, 15 days. So some members, they get the grace period forever. So it doesn't matter. We don't stop sending alerts. But you miss it if you send via Zelle. So please reach out. You can send the money via Zelle to my cell phone. I'll give you the cell. Please send email to support at TradeGenie. And you can send money via Zelle, but then you have to monitor your payment. What is next? Thank you. Yeah, so I'll continue with this kind of a teaching. Like so much to teach. So this is all free stuff I can teach. Regarding the stop. So regarding the stop, there is a time stop. So you can put the time stop. Let's say time stop. You can say, okay, if the trade is days in the trade for 30 days, and I will start providing the time stop also. So I'm working on it. I'm almost there to send you the alert on the time stop. So let's say the trade is open for 30 days. So if you look at some of the trades, they were open for 28 days and eventually recovered. So, but some they will expire worthless. So maybe you can put a combination. Say, okay, if the trade is open for 21 days or more and my options are down 70% more, I'll close it. Or some kind of combination. Or if I send you the technical stop level, and if it breaks and doesn't come back up, let's say if it's a call and it doesn't come back for 2 days, so there is another stop, kind of stop hitting. The support is broken for 2 days and the stock has not come above the support, and 2 days gone by, plus the option is trading at 65%, so I'll close it. So all this different kind of combinations I will provide, but I'm telling you now, right now. So you can do this. Let me read more. Someone very long question. If I'm gonna say $5 buy half at 5 and said later to buy another 50% or whatever at 430, depending on. So dollar cost averaging. Maybe I will hold another session on a dollar cost averaging. So don't do the dollar cost averaging on a willy-nilly basis just based on the option. You say, okay, I bought the option at 5, now it's trading at 430, I buy more. No, that's not the right logic, because you don't know today is 430, tomorrow it can be 3. Your dollar cost averaging should be based on the stock telling you that it's time to add more, not the option price itself. Unless if you bought at 4, now it's trading at 10 cents, and then you say, okay, I'm losing $4 and it's trading at 10 cents, so I load up the truck. I buy 100 of options at 10 cents. What can go wrong? I'm losing $4, so I go at 10 cents. You can make millions doing like that, or you can go broke. So ideally, you should average down when the stock itself is telling you that the rebound is taking place. Now it's time to add more. So whatever is the option price at that time, you buy. But then don't buy a bunch of contracts. You have to know how much you have allocated before and what was the total amount you intended to invest in that trade. And then you say, okay, I intended to invest $2,000 in that trade. I have already put $1,200. Now my money left is $800. So then you take that $800 and divide by the option price. And then whatever the option contracts come, you buy those contracts. So in other words, if you bought 10 contracts at 4 and now it's trading at 10 cents, you will not buy 10 contracts at 10 cents because that will not bring your average down. You will buy, so if you bought 10 contracts at 4, you invested $4,000 initially. So now it's trading at 10 cents, let's say. So $4,000 divided by $10, $4,000 divided by $10. So you'll be buying 400 contracts at $10. So you see the logic. You have to invest equal dollars, so or some kind of a strategy. 1/3 now, 1/3 later, 1/3 later, like that, dollars, not the contract. So don't buy equal contracts when you're averaging down. You need to put some kind of a money allocation. So let's say I put $10,000 in one trade, then when I'm averaging, I'm buying more. So I say, okay, I can buy 2 times. So I may buy another for 5,000 and then another one for 5,000. Total allocation 20,000, and that's it. I'm done. Now I know I am fully in, like all in this trade. What does the black candle signify? So black candle, red candle, in this. So you can color any color. So it depends on your platform or the chart. So black candle means market is bearish, or the red candle. So in China, they color the red candle when the market is bullish. So you will see a lot of reds when the market is going up. So red color is a good sign in China. So you need to know your trading platform what kind of color they do for the bullish and bearish bar. AFRM is 39.29. Okay, I don't know. Where can I find the chart you mentioned earlier? They don't appear. So when the trade is, when I send the new trade, I send the chart. I started sending it. I was sending it, then I stopped doing it. Now I started doing it again. So you will see the email with the chart. So it's just a chart with the line drawn, the technical analysis done, some thoughts, some reasoning. I just put the big lines, 2-3 lines about the stock. I don't go into, there's
I don't have any indicators. So I just there's more into based on the experience. There's more into technical analysis, but there's no indicator. So I just explain a little bit and then send you the chart. So there's a lot of things going on in the market when the market is open. So I have little time, like 10 minutes, to prepare the chart and tell my team to send it to you. It comes from a different server, so maybe it's going into the spam. So please check. Even though you get the emails, all emails today, tomorrow, all the emails can go into your spam folder. So do you trades have any edge on earning, or these are price technical? They're almost never related to earning. So the person who asked question left. So earning, we have earning service, so there's very selected stock and earning. Sometimes I don't send any because of the market. I cannot read what the stock will do. Earning is so good, but the stock is going on the other way. So earning trade service provides this, I think it's at $87. So there are many ways to skin the cat. So in earnings, there are many ways to trade. So for instance, I give you an example. For earning, let's say the earning came today and we were not in the trade. And now the market, that stock is moving into another leg. It created another leg or another target. So I would go long in that if it's going up after the earning, and I can see that it's going further. So let's say it's gapped up above the resistance or broke some resistance, or you can see clearly. So I send the alert in the earning service based on the earning came today. The earning, another earning trade can come when earning is supposed to come tomorrow or the aftermarket hours, and technically it makes sense to go long or go short. Whatever it does, it's showing on the chart. Where would be the damage if it goes the other way? Where I will exit if I'm going long on the earning trade and it goes the other way? Where is the exit? Where is the door? So always need to know the door before you go in the building. So where you will jump out. So if the window is on the first floor, then you say, okay, I'll break my leg, but I will survive. But if the window is on the 10th floor, then you say, no. If earning goes, I have no way of coming out alive if it goes the other way. So you need to evaluate the support and resistance level and have some dollar reserve to add more to the position. And if it does the thing what you expected, then you have very next day you have the gain. Earning trade can come from one stock making a move due to earning, and the other stock earning is 1 week later. So you put 2 plus 2 and you say, okay, it's 4 because Walmart beat the earning and it's moving up. Let me see the target earning. Oh, target earning is next week. So why I'm not trading target? So let's buy some calls on target, because 1 week from now earning is coming up. The expectation will be it will run up to the earning because the Walmart is doing good. So many things coming up. Maybe on earning it gapped down to the support. Now you go long. So these are the various flavors of earning. So earning is not just buying position yourself before the event occurs. So that's not the only way. There are many ways. So I do all that. So I provide you on the earning service. So just don't expect every day I will send you the earning trade. So I don't. So my intention is that, okay, you invested $87 for the service. As long as I make you and compensate you for the risk, you are happy with the return, it's fine. So if I put $1 today, invest somewhere. If I make $1.10, I say, okay, it's worth my investment. So 87 plus your dollar, if you need to have some reserve for the earning, and if you're happy with the result, you just continue. And then another thing that happens, earning has a season. So what some people do, they cancel the service just when the earning season expires, subside, they cancel the service. They say, okay, I cancel because there will be no trade. Then you never know. There is always something going on. Even the earning season is off. There is some stock which is announcing earnings. So you need to stay like a longer. Don't cancel the service and say, okay, I will save $87 because there's no more earnings. So if you worry like that, then just don't sign up for earnings. So what else? If you have any questions. Again, the exit in the option should not be based on the percentage, especially if the option price are lower price. So let's say that's why I'm very careful in sending the lower price option trade. So if I send something for 80 cents and then it goes to 20 cents, then I say, oh, where is the stop? So, well, there's no stop, especially for an 80 cent option. There's 100% a stop. So if it's 100% a stop, then you allocate dollars to start as if you will lose 100%. But the 80 cent option can go to zero and can go to $1.60 or $2. So it's not 80 cent option. We will not sell at dollar. If we buy at 80, we will not sell for dollar. So I'm not looking for that quick. So 80 cent option, it will higher. So if 80 cent option will lose you 100%. So you should make at least 100%. So when you ideally for options, overnight something can happen and the whole portfolio of options can get clobbered. So think like that. Any black swan event can occur and bomb falls somewhere or something happen and all options, then all the technical analysis on the market like major trend up or intermediate trend up, all will go on the side when the black swan event occurs. And then everything is, so be careful with the option. Option is a speculative game. So it's a speculative game and option is a double-edged sword. So please trade options. Options is designed for short-term trading and hedging. So think about that. All right. So I leave now. It's more than 2 hours. The recording will be sent to you. So I will upload on my YouTube channel tonight. And then you can, if you want to watch the recording, you can play. You can just go on a YouTube channel or you can go on the Real Trade Genie on the YouTube. There are some fake ones. So the Real Trade Genie, and then you will see this recording. And I intend to hold another session next Sunday. It looks like Sunday is the day, or maybe Monday. All right. So I'll see you when I see you. And thank you for coming. And Larry, I will contact you. Thank you. Bye.